Hello traders, the title of the video is Elliott, intraday trader pushes Dow Jones on the edge. Let's get started. Before we continue, I would like to say to traders, my apologies for the quality of the sound recently. I need to remind traders that it's a brand new computer. I'm using a Dell, a brand new headphone. So I believe there are some software playing with my sound system. So if during this recording there was some problem, please accept my apology. I'm trying to figure out what is causing this issue, and I'm on it, okay? So let's get started, all right? Elliott intraday trader pushes Dow Jones on the edge. All right, so before you even think of trading or which trading strategy you should use as an Elliott trader, or if you are applying the Elliott principle, counting wave, forecasting the market, you do not want to violate the market pattern. Now, I think I should receive an award for saying this all the time because I say many times that the market pattern will determine the appropriate trading strategy that we must deploy. So what is happening is that a trader may be using a trading system, a trading method, a trading strategy, but if that trader is using it against a market pattern, that trader can quickly get into trouble. So trader asked me, say, George, which market pattern should I look at? Is it on a daily chart, weekly chart, monthly chart? So if you are looking at the market pattern, like I'm on the 4-hour time frame of the Dow Jones, okay, so I'm going to go now to the 4-hour time frame. All right, if I'm on the 4-hour time frame looking at the market pattern, I must check the corresponding higher time frame to the 4-hour time frame, which is the weekly chart. If I'm on a daily chart examining the market pattern as an Elliott trader, I must check the monthly chart. If I'm on the monthly chart, I must check the yearly chart. If I'm on the hourly time frame, I must check the daily chart at least. All right, where is the data here? Okay, what I'm going to do, let's pause the video. Hopefully the sound will be okay. I'll be back in a minute to find out where is my data in a minute. Okay, traders, thank you very much. Here we are. So on the 4-hour time frame, as I was telling you, we have a consolidation between the zone of 26486 and the level of call it 25500. The median line, roughly speaking, is somewhere near in the zone of 25938. So a consolidation is taking place. You see here, price went up to the red line, come back to the blue line here. All right, this one. Okay. And then it went back there, and then it come back here. Now it went up there. Now you can understand why people are selling it, because we are again at the top of the resistance. This is what we call accumulation and distribution. When we have a balanced market, there is a distribution at the top of the consolidation and accumulation at the lower part of the consolidation until we see a shift, right? A shift, S-H-I-F-T. Probably I mess up again the sound. If that is the case, my apology to traders. All right, in the price structure, right? So though there is what we call a balanced market, in theory, equal force between the bullish force and the bearish force, there is a change that is latent, L-A-T-E-N-T, latent, all right? So it's brewing behind the scenes. So one of the group will succeed to push it either to the upside, above the consolidation, or below it. So it is completely normal that people are giving priority to bear signal at the top of the consolidation right there. This is a correct trading strategy. So Even if you are an Elliott wave trader, you say, oh, George, I was thinking of a flat correction. It went up on the 4-hour time frame. It come back down, blah, blah, blah. You are counting internal wave here. And you're doing your Elliott wave count. Nothing is wrong with that. But the message that I'm communicating to Elliott wave traders is that please, please, please do not use Elliott wave like the most important thing in the financial market. It is important, but the most important thing is what? Market pattern. You can quote me on Twitter, Facebook, everywhere in the world that I said it. The market pattern is more important than anything else in the financial market. If a financial instrument is going up on a 3-minute time frame, 5-minute time frame, hourly time frame, monthly chart, yearly chart, it will be in a rising channel. Everybody will agree to that, okay? If it's going down on a 1-minute time frame, 5-minute time frame, or a daily chart, weekly chart, it will be in a declining channel, all right? If it's consolidation, there are two types of consolidation. Either it's in a horizontal channel on any time frame or in a triangle. Everybody will agree with that. So it doesn't matter which Elliott wave strategy that we are deploying, whether we are counting well, whether we are validating the way, whether we are forecasting the market using the Elliott wave principle. You don't want to, all right, ignore the market pattern, those market patterns, all right? Very, very important. So sometimes traders get into trouble because even if you are using technical indicators, CCI, divergence, you want to use them in conjunction with the market pattern. So this is something that I say to TSTW trader all the time. Even the TSTW 24 or as trading signal, we want to align them with the market pattern. So sometimes you may see like this, a consolidation on one time frame. So now because it's happening on the 4-hour time frame. So why the price finding the support here? You want to understand it. Why? You see, today it gap down, it went down. Why is it turning around? Because there is a midpoint target here. You see, professional trade Dow Jones. All right. So if you are somebody trading Dow Jones, please don't forget the market pattern. So they know that there is a midpoint target here. All right. So what I'm going to do very fast, I'm going just in bracket, all right, allow me to go quickly to the 3-minute time frame to see what's going on. So the price went below the long-term equilibrium price level, for the Dow Jones. It's at a 26050. You want to be below it, and we are headed to, this is the midpoint target. So those who showed it yesterday, whatever, Friday, whatever, so she gap down, they know that is a midpoint. So it's normal to bank profit. They want to put some money into their bank account. They don't want to waste it. It's nice if the market is open and you are quickly in profit that you do not give it back. So this is a normal, healthy reaction. Okay, now, should we jump on it and buy it straight away? All right, this is it. So sometimes you have to wait. You have to wait. You can buy it now. Okay, somebody may say, okay, George, okay, common central is broken on the 3-minute time frame. I'll give it a chance. Okay. If you are doing that after this candlestick buy, see this one. Common central is broken. We use it common central. And now you say, all right, this one stop going. Now you say, all right, I'll join them. Use a tiny stop loss, 10 pip, all right, which one's good for you, and you control it. If they take you out, you don't cry about that. You do not, okay? But you can, though, you see, common central is broken, start going up. You may decide to wait, all right? You can decide to wait and see, or maybe wait for the price to form, for instance, either a double bottom chart pattern or an inverted head and shoulder chart pattern. You just want to wait because you don't want to rush, that's all. And sometimes we do rush. You can just say, I'll buy straight away, and then you end up losing first. And traders that are more patient may end up collecting the profit. Okay, you were right that it's going to go up, but maybe you rush a bit. All right, this is what I'm saying. So like this now, I'm not going to enter the trade yet because you see it got down, it did all this, it come here, it's turning around here. I want them to I want to give it more chance because I want more information. That's what I'm saying. A market is open, all right. Now it went down. We want the price to tell us more. That's it. It's like somebody come to you, saying something to you. You are listening. All right. Do you watch those video? The Fourth Amendment audit in America. Those who go around with their how do you call it? Their their camera into government building, filming people because of the Fourth Amendment in America. All right, freedom of press, and they try to audit. They call it Fourth Amendment audit. Just YouTube search Fourth Amendment audit, or just YouTube search the phrase auditing America, and you see videos of young men going around with their GoPro camera filming in the government buildings, exercising, okay, their freedom to film in a public place. All right, okay. So I was watching one of those videos last time, and there was one police officer that was quite very rude to one of those guys. But when their superior turned up, he used a very powerful communication skill. He was standing there, he folded his arm and was listening to the young man. He didn't argue with him. And at one point, he asked the young man, this is in bracket, by the way. We're going to come back to our topic now. We're just in the bracket. I find it very interesting. Now, it's something to do with waiting and asking for more information or listening to the price. So, market is open at this. You don't want to rush. Sometimes we do, right? If you are doing it, like I said to you here, somebody want to buy here, that person can, okay, I want to give it a chance. Sometimes it can work beautifully. You want to use 15 pips, and you make that decision, all right? If they take you out of that trade, you're not going to think of it second for more, okay? You just know, all right, it didn't work, that's all, okay? And sometimes it can work beautifully, okay? So what I was telling you about these people going around in America doing what they call auditing America, to search it. And the officer did something very interesting using a powerful communication skill. He was listening to this young man, all right? And now he said to the young man, do you have any ID on you, all right? And the young man said that I don't have to show you my ID. I don't have my ID on me. Now, you see, normally the officer should turn around and say, why you don't have your ID on you? How do we know who you are? Or blah, blah, blah. All right? But the officer, you know what he did? He said to him, he said, oh, I have my ID on me, you see, and I can show you my ID. So he didn't criticize the young man. He just said to him, I have my ID on me, and if you want, I can show you now. The next thing, the young man said to the officer that I have my ID on me, and I won't show you now because I'm not obliged to, but probably at the end I'll show you. See, this is a powerful communication skill. So the same thing we do sometimes, all right? We are trading. You can use the same tactics, all right? You can ask for more information. So, like here, you see, the common center is broken, isn't it? Yeah? The common center is broken. It's retested here. It's going to turn around. Okay. Buy the book. Traders should buy. Traders can buy. They can buy. Why? They can see that, okay, the price now at the midpoint target, and now the common center is broken. The next step, listen a little bit more. All right? Remember what are the story I was telling you now. Listen a little bit more. Be a little bit composed. Ask for more information because the market has just opened. It just opened now. And this is what we are looking at now. So I don't want to rush, or I don't want to rush. But if you decided to enter the trade like this, just know that, okay, I'd make that decision, but I want to control the risk. And if they take me out of that trade, that shouldn't be a problem. That's all. Okay? So, all in all, The market pattern is very, very important to all traders, whether you are stochastic trader, CCA trader, RSI trader, TST trader, all right, Mambo Jumbo trader, Fibonacci trader, whoever you are. It's just too important. And sometimes the reason why I talk about it all the time, because I know some traders, it will be very helpful for them to pay attention to the market pattern. So here it is, gap down. Its target, ultimate target level is this one here, okay? And there's a midpoint target here. It can turn around here. So that's why we need more information. So I'm not going to rush. I'll wait a little bit more. I want them to show me more what they are going to do. All right. I don't want to jump into it and buy, and they push me out. It's very, very nice if the first trade is a winning trade. Take it from me, all right? It's very, very nice if the market is open and your first trade is a winning trade. Why? Did you ask that question? Very, very important question, because it boosts your confidence also. All right, it's positive. And not only that, if the second trade happens to be a losing trade, the first one will compensate to it. To avoid that the video is too long, all right, let's pause it to 60 minutes. I haven't entered the trade so far. I hope you are enjoying this discussion so far, talking about Elliott wave intraday trader pushes Dow Jones on the edge. All right, so I'm going to pause the video now with your permission, of course, and we'll come back to it if I'm about to enter the trade or something very, very interesting is taking place, and also to avoid that the video is too long. Okay? Because I can read your mind. I know you are saying, yes, George, let's pause it. I can hear you. All right? I can read minds, okay? Do you believe that? Oh, okay. All right. If you believe it, that's your opinion. Okay? So we come back and see whether they're going to give us a clear-cut indication. Are we going to the left or to the right? Are we going to the highest level or to the lowest level? We want more information. So like the officer was doing, we want to listen to the price, be a little bit patient and not rush. Though we are in your way traders. So one more thing that I can discuss before we wrap it up is this, all right? During a consolidation, all right? An Indian way trader that is on a lower time frame, for instance, okay? You will see last time when we were counting, so you may see, especially like a 4-hour time frame, you're on a 3-minute time frame, probably going up from here to here. On a 3-minute time frame, for instance, you may see like it's trending. You may count 1, 2, 3, 4, 5, all right? It's just a speculative way count. It's not an impulse wave. Genetically speaking, can we say that? Genetically speaking, it's not an impulse wave. But it has the structure, it looks like an impulse wave, but it's a correction. But on a 3-minute time frame, you manage to count 1, 2, 3, 4, 5. And when it starts pulling back, the first reaction, you may notice that it looks like a flat correction or a corrective wave. All right? But all in all, it's a correction. The consolidation and the triangle is a correction. It's a pause. The market pausing or acknowledging a key level. So what we are looking at here on the 4-hour time frame is the Dow Jones Index on the 4-hour time frame is acknowledging Georges Beaulieu, okay, long-term equilibrium price level. See, look, what George was saying, the long-term equilibrium price level at 26050 is a very important key level. We can't ignore it. We need to slow down here. That's what the price is doing here. It's slowing down. It's a correction. If it's not a correction as such, it's a pause. Market slowing down, acknowledging a key level, or sometimes the market will slow down to acknowledge a very important economy news. That's why when we have a major economy news or a major event taking place in the world that can affect the market will pause. It will switch into a consolidation. All right, pausing, going up and down. And also, if the trading volume is very, very high, all right, too much trading activity will also slow down the price. So a lot of people selling, a lot of people buying at the same time. That's why we have a balanced market sometimes. Am I talking too much? So all the speculative area we count on the 3-minute time frame may look like this move from here to here, may look like a 1, 2, 3, 4, 5 in a downtrend, or may look like a corrective wave all the way down here. And then you see again 1, 2, 3, 4, 5 up. You remember we were doing on the 3-minute time frame before. It's just a speculative wake up. But the structure, that's what we are saying, the market pattern will determine the appropriate strategy that we must deploy. This is the speculative either way count is completely different from what we call either way validation. The either way validation, we can start from the yearly chart all the way to the 3-minute time frame, or we can start from the 3-minute time frame all the way to the yearly chart, connecting the dots between each time frame. 3-minute time frame, all right, we go to the hourly time frame, we go to the daily chart, we go to the monthly chart, we go to the yearly chart. This is about either way validation. And the structure of the price are genetically, okay, either impulse wave or corrective wave. Though sometimes you may look at something and call it a corrective wave or an impulse wave on the lower time frame. It's just what we call a speculative either way count. You want to understand those things because it will help you as an either way trader, so you know exactly what is taking place. So all in all, there are a lot of either way traders will be, trying to be too smart, finding out all kind of pattern. That here, any technical trader that just know that this is a consolidation, very simple, all right? They are selling here, they are buying here, there's a midpoint target here. It makes sense to take a bit of profit here. And this is exactly what is happening here. So, should we buy that one? All right, so now, it slowed down a little bit here, okay, after this, that is pulling back. I want more information. This one pierced through it. I feel like buying after this one, but I would prefer it to give me something like looking like a chart pattern, double bottom, or inverted head and shoulder chart pattern. That will give me more confidence, and with that, I can work with that. So I'm going to be a little bit more patient. I may not even enter a trade today. So this is what's happening sometimes. You are waiting to enter the trade. Now, as I'm talking to you for more than 20 minutes now, all right? Another thing I want to say to swing traders, all right? Try to have like a notebook, all right? Are you a swing trader? Okay, have like a notebook. Try to do a little bit of experiment, all right? I've done it myself where I have discovered that it's better for me personally to enter my swing trade on Tuesday instead of Monday. I also, in my own experience, discovered that it's better for me, personally speaking, not to enter any swing trade on Friday at all. That's rule number one. George never enter a swing trade on Friday. It doesn't matter how beautiful or gorgeous, all right, the trading setup is. Okay, so I want swing trader to do a little bit of experiment because I've been saying that it's better to enter on Tuesday instead of Monday. Try to play with it and see which one is good for you. Is it Monday better for you or Tuesday? Let me know. Another thing I want to ask swing trader to do is this. Is it better for you to enter the trade on Tuesday and cash out first thing Friday morning when New York is open? Or is it better for you to enter the trade on Tuesday and cash out, okay, Thursday, just before the market is closed? Remain in the trade Tuesday, Wednesday, and Thursday. All right. Now, how often, try to find out for yourself, how often have you managed to have a successful winning trade that you allow to stay open through the weekend? If, for instance, you are a swing trader that is all the time, if you find out that if you leave your swing trade open through the weekend, you end up losing more than you are winning. You need to change that strategy. All right? So you may decide that, okay, leaving swing trade throughout the weekend is not good for me. The statistics, personal statistic, in my experience, did not confirm that I should leave my swing trade open throughout the weekend. So do those kind of experience. This is for oneself, one swing trader, trying to figure out what is the best approach for me, what is the best attitude I should adopt. I've done it myself. That's how sometimes I say things, traders will disagree, but then I will turn around and say, that's my personal view, because in my own experiment, I have discovered that, George, it's better for you to enter your swing trade on Tuesday, allowing the market to exhibit, to show me what is likely to happen on Monday, and then on Tuesday, I try to find the best entry point where I can enter the swing trade. Another thing that I can say to swing traders, all right, is how do you enter your swing trade? Do you neglect your entry? Because a swing trader that is deploying a top-down trading method may be very, very good at selecting the setup, may be very, very good in identifying the signal, but maybe a little bit careless when it comes to the entry, which means, oh, now the signal is fired, I must enter the trade. You do not have to. You can be very, very selective. Oh, have I messed up the sound again? If that is the case, my apologies to traders. So you want to be very, very selective, which means the setup is very good, all right? The signal is excellent. You do not have to enter the trade if the market environment is not good or if it didn't set up for you nicely. I will be recording a video about the expression that professionals often use and say, I always allow the price to come to me. Have you ever heard that? So I'll be talking about it in another tutorial, all right? That's a good excuse to record another video, all right? So they are saying, when I start trading, I hear that traders say, it's better to let the price come to you. I always wait for the price to come to me. And I'm looking and say, what do they mean by that? All right? But because I don't want to reveal to everybody that, all right, I'm very new, I keep my mouth shut. But then I'm asking that question myself and say, what do they mean by allowing the price to come to them? All right? And there's no video on YouTube about that. I don't think so. So I'll be recording a video about that. So it's very simple. Like now, you see here, allowing the price to come to you, whether as an Elliott trader or swing trader, means that, okay, you want your entry to set for you nicely, because there is a mind game in the financial market. You see now? So all this is going on here. You see this blah, 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 blah. The market can go down the whole day. People may jump into it, buy quickly, and then the whole day from there, you just go down. You will shock everybody in, and then just go down. And this is one thing you do not want. So those that are more patient end up collecting everybody's profit. All right. So they are very, very demanding traders out there that will always allow the price to come to them, meaning that they are looking for a certain setup before they enter the trade. All right. So like me today, I don't know why, but I just feel like it's better for a Dow Jones in this zone to show something to me, to give me more information before I even buy or sell something like a double bottom that will put me more at rest. All right. So I can say, all right, there is a bullish pattern. Then I will decide to buy, which it pull back here instead of just touching it and then everybody jumping on it and then it goes down. All right. Show me something more, or an inverted head and shoulder chart pattern that will be something I can work with in that zone. Because why? Did you ask that question? Okay, if you did, you are unbelief boy. Because on a 4-hour time frame, remember this. the ultimate target. The reason why you need to be careful here is because the ultimate target is here. Can you see that? It's this one here. Now we are hanging around here. Is he pausing? Is he slowing down before continuing all the way down here? So if I want to enter here, I want the price to tell me a little bit more. Do you remember that long story I was telling you about auditing America and that officer that was using a powerful communication skills, folding his arm, listening quietly, and not disagreeing directly with the gentleman, and always using a positive communication skill. I find it very, very interesting. All right, if I remember the title, I will tell you. Okay, so enough of my blah blah blah. So let's pause the video for the first time, and I will come back to it if I'm about to enter the trade. Okay, I'm going to, before we go, I'm going to leave this horizontal line here. All right. Okay, because why do we need to leave that one there? You see this one. Okay, color it into orange. You can see that one. I'm on the 3-minute time frame. So price gap down, okay, from bounce up here, and then went down to form this low. This is the low before the last low here. So if it goes back above this orange line, then we will start thinking of buying more than selling. That's all. So this is a psychological price level on this 3-minute time frame. So I leave that one there. If they don't give me my inverted head and shoulder chart pattern or double bottom chart pattern, if they go above this high here, I will start thinking, well, George, maybe you should consider to enter the trade very soon. Okay, so pausing the video for the first time after talking to you for 31 minutes. This is it, live day trading. Can be even 4 hours. So I'm thinking today we should make it like 8 hours. All right, this is to make you laugh a bit, or maybe 1 hour or 45 minutes or 50 minutes. All right, speak to you soon. The time in London is 53 minutes past 3 p.m. on the 3rd of September 2019. All right, pausing the video for the first time with your permission, of course. Speak to you soon. Okay, traders, we pause the video right here. Hopefully the sound is good. Can you hear me? Okay, if that's the case, that's good. And now, as I told you, the price did exactly what I'm expecting, forming a double bottom chart pattern. So I'm a little bit waiting for my entry somewhere here. That common straight line to be broken. Is a nice structure. Minimum price move is free. Fingers crossed, please. Fingers crossed. All right. So if you've done everything that you need to do, all right, you can keep your fingers crossed. All right. So that's why I say fingers crossed. Hopefully, they will allow you to turn around, because I don't want to sell the Dow Jones beyond the midpoint today. So here is the price went down. So it gap down, boom, 1, 2, 3, and then again here, 1, 2, 3, and then again 1, 2, 3. Is he going to find a support finally here? So I leave that line there, and if so, now you can see that this candlestick bar closed a little bit above our trend line. All right, right there. So I'm going to take it easy. All right, do you understand? I want to enter the trade gently. Are you getting it? All right. So what I'm going to do, I'm tempted, all right, I'm tempted to place it there, because this is the candlestick bar that is breaking that common center line. So I'll put it a little bit to the high there and see whether they're going to be friendly to me or not. All right. That's how you enter the trade gently and see whether they're going to be friendly or not. If they are not, you just go away. So that's a limit order at the 26026. All right. And I'm placing it because somebody sold it here. All right. If that person is selling again, the price will find it very difficult to go above the high of this candlestick bar. So, but if that person is not selling anymore, he can go above this high here. That's why I want to buy gently, gently, meaning that that's it. I'm now in that trade at 26026. Now you see, pull back a bit now. So let's talk about the stop loss. Okay, let's see. 26026. All right. Okay, all right. That's a bit of okay, let's use 30 pips, but I will be willing to move my stop loss. Did I say that I'm willing to move my stop loss? Okay, I said it, all right? So I'll use the 30 pip because that's not a good place for that stop loss. I know a lot of traders will be looking at it and say, George, since when did you start trading or day trading? Okay, so I'm using 30p for now because normally I should place my stop loss a little bit below the tail of this one. But I want to use 30p to start with, and I'm willing to move my stop loss. So far, it's looking good. Hopefully they will play nicely. That's why I say to you, fingers crossed, all right? That's why I say fingers crossed. I was patient. I want the price to come to me, as they said. This is what he did now. I was expecting a kind of a double bottom, and I was not the only person. As you can see, a lot of traders were expecting similar thing, and now we will see whether there will be more buyers or not to push it to the high place. All right. So here it is. Entered the trade at 26026. Stop loss 30p below at 25996. Fingers crossed, please, because I've done what I need to do. As always, in trading, we need a bit of luck. This is just so important, all right? You need a bit of luck, all right? Very, very important. Fingers crossed, all right? So don't cross your fingers, your hair, after you haven't done the right thing. After you have done the right thing that you're supposed to do, all right, now, please, you can cross your fingers. Cross your fingers, your hair, your leg, all right? Everything that you can cross, all right? Just cross them. Okay, so this is good, beautiful trade. Now you see, I'm already 24 pip up. So let's see whether they're going to be friendly or not. So like now, I can move my stop loss 15 pip up, all right? Can we do that? Because they went up more than 15 pip. To avoid that suddenly we see a long candlestick coming down very fast, and I lost 30 pip, I can reduce, okay, my stop loss to 15. So if anything happened, instead of taking 40 pip loss, I may take only 15 pip, which is good, all right? Should we do it? All right. Okay, let's do it. Because I can read your mind. Okay, that's there. Okay, that's my 15 pip stop loss right there. 26011. So you see, I start with 30 pip, I move it 15 pip up, so I'm risking, all right, 15 pip. Have I said before that I can still move my stop loss? Yes, I can still move it if I want to. So we will see, or I will see. Okay, so now they push it from where I enter it to the, you see, the market is acknowledging, even on the 3-minute time frame. Can you see that? Even on the 3-minute time frame, the market is acknowledging that long-term equilibrium price level 26050. Powerful stuff. Powerful stuff. Okay. So I'm now in this trend using now, as I'm speaking to you, 15 pip, but I am ready to move my stop loss. That's my decision today. Okay. Gently, It's very nice if the first trade is a winning trade. So because we have been talking for too long, and we are trying to manage the time, all right? And also I can read your mind, okay? Let's pause the video one more time, okay? Because I'm now in the trade, so we're just going to see whether it's going to work. And if they're about to kick me out, I will come back and show you very fast. Or if I'm about to move my stop loss, when they put me under pressure, I'll come back and show you that. Or if I'm about to take my profit, I'll come back and show you. All right, it's doing very nicely now. So what I'm going to do, I'm going to show you very fast. For this trade, I will be happy to take, okay, 50 pip, 50. That would be good. You may say, George, that's too much. Okay, so I was originally risking 30 pip. Normally, I should be saying risk-reward ratio, okay? Risking 30 pip, I'll be happy to take 60 pip, all right? That would be better risk-reward ratio. So I'm a little bit conservative by asking for 50, all right? So will they do that? That remains to be seen, okay? So before we pause the video, where is the 50p 26076? That will be my greedy target. If they are friendly to me, let's put that into red. And nowadays you can set even okay, a limit order to close the trade straight away when you hit that level, especially those that are trading part-time. If you are working full-time, you must have like a limit orders to close the trade for you at a specific price level. Okay, if you are not watching the market live, because it can be tricky sometimes to be working and sneaking into the toilet and to check your mobile phone and what's going on, sweating like a donkey, blah blah blah. Okay. Okay, so the time in London, 26 minutes past 4 p.m. Tuesday, the 3rd of September, and posting the video after 42 minutes. So hopefully, if I get paid here, so we just wrap it up straight away, and that will be less than 50 minutes. That will be good. So the video is not too long. Otherwise, we can push it to 4 hours. Did I say 4 hours? Yes. One time I will record a video for 4 hours. Okay. New York is open. I sit down, start trading many financial instruments until New York is closed. All right. That will be the longest video I will put on YouTube. All right. Because I'm more experienced YouTuber, I'm allowed to post video more than 2 hours, even more. So I can do that. Okay. We should do it one time. So I'll be trading currencies, commodities, or stocks. All right. Indices at the same time as soon as the market is open. The best day to do that will be Tuesday. I won't do that on Monday. I won't do that on Friday. I would prefer to do it on Tuesday or Wednesday. And then, especially if the market is going to move, that will be excellent time. So the reason why I haven't posted the video is because the price is approaching my target. And hopefully, it will allow me to take my 50 pips straight away. It's a little bit, it's only 10 pip away. Should I take my profit? Because if they want to slow down, I will grab my 40 pips. I'm now in 40 pips. So nothing. I can move my stop loss. You see my stop loss to my entry point, which means now I have a zero risk. You see, this is about the trade management. So day trader can do that. So if, for instance, a candlestick, you see how it's coming down very fast. You see that? It comes down very fast, like this. Now, that will be zero loss and zero profit. That was very quick here, this move down. You see? So we are saying. I see that? Now you see that? You see how it turned around? It was 40 pips here and very fast. This one. That's why we have to control the risk. So now, if they push it down, that will be zero loss and zero profit. And I will close the trade. And I mean, then I will stop the video. So at the end of the day, you can see that I could have taken my 40 pip here, but the price was not very friendly here. They were replicating. You see this one. If you are watching the price, look on your left-hand side. Somebody sold it here. They did the same thing here. Can you see that? that shadow there. All right, so it come there very fast. They push it back down. They were looking, people traders that were looking on their left hand side, they saw it. They say, well, George, we're not going to wait for you to hit your 50 pip. We're going to come out straight away. And that's what they did. This is what was scaring a lot of trade. So what I'm going to do now, if you come back to 40 pip, I'll come out of that trade, okay? Waiting to come out of that trade. In fact, I can move my stop loss here. 57, that's it. 58. Then I'll take 32 pips. That will be better than zero profit. That's it. So that's now my stop loss right there. And they're pushing it now. Chrome, I'm out of that trade. 50 pips. Very fast. So this is it. Very nice example. So I'll be recording a video about waiting for the price to come to you. All right. So somebody who bought it here, okay, after this common strategy is broken, was not too bad. It went up a bit, but look, I waited, all right? I was using that powerful communication skill that I learned from that officer, okay? He was just listening carefully and using a positive language instead of saying, why don't you have your ID with you? Everybody carries their ID. That's suspicious. You just say, I have my ID. I will show you also my ID. You see? Powerful stuff. So he spent more time, did increase the person, did he interrupt the person, all right, and was just listening, all right, and he dissolved the situation very fast, all right. Now they have another expression that they use, de-escalate the situation, all right. This is what he did, all right. So the same thing I done to them. Be patient. So this is what I was trying to show today. Be a little bit patient, be very demanding, be very selective, and wait for the price to come to you. All right. So don't put in a comment section, George, what do you mean by the price coming to you? Because I'll be posting a video about that, okay? Probably at George Trio YouTube channel. We'll be talking about it, waiting for the price to come to you, because I think that I've done it myself. When you see the setup, you like it very much, the signal is in place, and you just want to enter the trade, and because you didn't allow the price to come to you, that can also create a bit of stress, or you may end up losing or have to move your stop loss, and so on and so on, you see. So like you see now, this day trade, I move my stop loss 15 pips, all right? Okay, so reduce. So my intention is that you want to control how much you are losing. And it's very important that the first trade is a winning trade. So I need to control it very carefully. So I move it to 15 pips. The push it up, all right? It was at 40 pips, all right? Okay, I was expecting 50 pips, a bit greedy for my style, all right? So now I move it to the entry point, zero loss, zero profit. You can see this candlestick bar almost take me out of that trade. If he pushed it a little bit more, that would have taken me out of that trade, okay? I mean, which was it? Was it this one? Yeah, was it first this one? Was this one first? So this one went up first, and then they push it back down. You see this one was coming near my stop loss that I placed on my entry point. But finally, it turned around to go up a bit, and this one pushed it above my target level. So my target, why I left my target there? Because this is the nut, okay, for a double bottom. So if I want to buy again, this is the nut. So this is a double bottom. Chart pattern. This is the neckline here. The neckline is also corresponding to this psychological price level. So like he pushed it like this. If I want to buy it again, I will allow the price to come to me. Again, I'll wait for you. I'll say, I'll prefer you break above the nut, all right, and you give me a higher low above the nut, or retest the nut and confirm it at a support level, and then that will be a good thing for me. And I say to traders, when you are using a double bottom chart pattern, you can combine a double bottom chart pattern with the pitchfork tool, like this low, the nut, and this low here. You leave it like this, It's always useful. So if you down it like the hit the median line, pull back, retest the line, and then common straight line is broken, that'll be good. Or another scenario will be is going up. Okay, let them move that picture to them. Or as it's going up now, okay, it's approaching the knot. Some trader get a little bit scared. All right, it can happen, and then he pull back a little bit more. Pull back a little bit more, probably to this level. And then they scare some people out. And then before it start going out, if this common straight line is broken, I can gently enter near my the long-term equilibrium price level and hide my stop loss below it. That will be another scenario. All right, so I can continue talking more and more and more. I hope you are enjoying this long discussion, but we will stop here. I hope you will find this video useful. Most importantly, that you may gain something from it that will help you to improve your intraday trading and also your Elliott wave trading. So to conclude this video, talking about Elliott wave intraday trader pushes Dow Jones on the edge. The reason why I'm using the phrase pushes Dow Jones on the edge, it means that I'm very demanding to the Dow Jones, and I'm expecting Dow Jones to comply to my demand. Now, the Dow Jones, of course, does not have to comply to my demand, all right? But I was pushing it to the edge, expecting it to do something that will please me. And he did it, which is good. You see that? He did it exactly what I was expecting, and I get paid nicely. Also, he hit exactly my target, and he turned around there. What a beautiful day, all right? Pride, okay, coming to you and rewarding you. All right, so this is a message I want to communicate to day traders and also to swing traders, as I'm explaining to you. What will be my next move? Again, I want it to come to me. All right, coming to me. All right, breaking the ball, the neckline, retesting or touching the median line or picture two, or repeating the second scenario. That will be like something that I'm expecting, and when it is taking place, I have an edge. The next step is to control it so I may get paid. Like before, I was telling you that I was expecting a double bottom chart pattern. Now, it happened. Do I have an edge? Yes, I have an edge. I have an edge 100%. This is what I'm expecting. Now, he did it. Not only that, the price structure, 1, 2, 3. I'm an Elliott wave trader. Minimum price move is 3. 1, 2, 3 again. This is a distinctive double bottom chart pattern. 1, 2, 3 again. Now, this common straight line is broken. I enter gently there. Look at that. And because I have an edge, because the price fulfilling my expectation, this is what we are saying to Elliott wave trader. You want to make sure you get paid. That's it. You forecast it correctly. You expecting it, all right? Now, it's confirming it. You don't want to let yourself down. You want to make sure you get paid. This is about managing the trade. Be very, very patient, not violating the market pattern. So this will conclude our discussion today about Elliott wave intraday trader pushes Dow Jones on the edge. If this video has been truly useful to you, if the sound is also good today, please let us know by giving us your beautiful thumbs up, all right? However, if you see that, George, you promised that it's going to be 50 minutes, now it's 53 minutes. You were speaking not with your Texas accent today, you were speaking with your Bangalore accent. I prefer your Texas accent. All right, mark the video down, okay? However, if you think that, this is an essential tutorial, feel free to share it on the social media. I always say to traders that are sharing our video that thank you very much for sharing our tutorial. Subscribe to our YouTube channel today. Our YouTube channel is 24 Elliott Wave. Digit 2, digit 4, Elliott Waves in plural. All right. Be sure to click on the notification bell. So anytime we record a new video, you will be the first person to be notified. Until the next time, enjoy yourself and be very happy. We are the Elliott Wave traders talking about Elliott Wave intraday trader pushes Dow Jones on the edge. Have I said that the Dow Jones is my favorite financial instrument? Yes, I did. Okay, all right. Thank you for watching.